Hello everyone, welcome back to Alice Blue's YouTube channel. In this video, we'll be talking about pivot point indicators, what they are, how we can use them to build an efficient trading strategy, the logic behind it, and more. Also, please let us know the topics you want covered in our upcoming videos. And if you liked this video, make sure to like, share, and subscribe to our YouTube channel. So, pivot points are indicators, leading indicators which are derived from previous candles or previous historical data. If we go over to the chart here and type pivot, we'll see this option for pivots standard. And if we click on that, it will get added to a chart over here. And if you go over here to the pivot point settings, then we'll get to see a variety of pivot points like traditional, Fibonacci, Woody, Classic, DM, and Camarilla. We'll be talking about traditional for this video. This is the formula for the traditional pivot point. So, if you're calculating the pivot point for intraday, then we take the sum of the previous days' high, low, and close, and then divide it by 3. A pivot point is the average or the mean reversion of these three values. This resistance 1, resistance 2, and support can be located in this chart over here. If you're using intraday, then you can use 1 minute, 3 minute, 5 minute, and up to 15 minutes of time frame to plot a pivot point based on the previous days' high, low, and close. If it goes over 15 minutes, then you'll end up with weekly pivot points instead. Similarly, if you come over here to the daily time frame, then you will get monthly pivots, meaning the high and low per month. If you see here, this pivot point shows us the data from December 2nd to the last trading day in December. Here also, the pivot shows the data from the 1st of October to the last trading day in October. This is a monthly time frame. And if we move over to the weekly time frame, we can see the yearly pivots. This can show us the support and resistance per year from different markets. So to sum up, pivot points lets you understand the support and resistance you'll be getting from different markets for the upcoming months, according to which we can build various strategies. As an example, let's take a look at Coforge Limited. If you look at the pivots for this month, you can see the exact point from which the price is getting reversed. From this support level, the market has reversed. For intraday, we will use the same process, but the time frame would be smaller. That will be the only difference. Resistance existing at a higher level has the potential to put selling pressure on the market. Anyways, just because we got an S1 here or an S2 here doesn't mean we can just go over and buy stocks. There is this concept of reversal confirmation, which needs to be verified. If you're not aware of reversal confirmation, you can use candlestick pattern instead. There is another concept called MACD or MACD indicator, which can also be used to identify reversals. Right now, we're looking at weekly time frames. If I redefine this a little and go over to a daily time frame, we can get a reversal confirmation. If you look closely over here, there's been a crossover, but it is below 0. If you take this point, the probability will be quite less. However, if a similar crossover happens above 0, the probability can increase, and you can consider that point. You can build such strategies for the same. Now, let's understand the pivot points here. Keep in mind that pivot points are largely used for intraday trading. So let me show you how you can use pivot points for intraday trading as well. For this, let's look at the Nifty index. Take a 5-minute time frame. If you look at the market for the last trading day, our pivot point is at this level. This level is the mean reversion area. After that, we have S1, which suggests potential buying pressure for the market. Same goes for S2 as well. But our market is currently below S2 and has had a breakdown. Here we would expect the market to go to either support 2 or after breaking S1 it will rise till this pivot point. However, here support 2 has been broken too. So again it will either go down to S3 or after breaking S2 it will go back up to S1. And if S1 also gets broken, it can go back to the pivot point again. Here the prices are slowly moving towards S3 and S3 has also been broken. Now again, it can go down to S4 or it can go over to S3 after breaking S4, from where it can break S3 and can go to S2, after which it can go to S1 too, after breaking S1. This is not an executional view. This is just a view that shows various levels within the market and how the market behaves at each level. So building a direct strategy here is quite risky. Now the prices have reached S4, but no buying pressure have been created yet. The prices haven't quite reached S5, but it is actively trying to break S4. I'm going to mark the high of the candle that broke this level over here. And if you analyze this level with a 1 or a 3-minute time frame, we'll find a range contraction area and a range that has been created. If this range breaks for any reason, it will be known as a range breakout. Now let me go back to 5-minute time frame. If we were to form a strategy here, we have closure for this candle, and if we get a closure on the high of this one too, we'll get a good opportunity for the long side. Strategy is right here. We'll keep our stop loss with this swing low, which has been created earlier. If we look closely, S3 price has been crossed. So we'll keep our initial target at S2. Now let's look at what's happening here. See, we can take levels as our targets as well. The last trading day is a trend day. So the market doesn't normally tend to respect the pivot levels as much. But just look at how far the market has reached. A rejection has been created at the pivot level. Now the pivot level has a breakout. So now the price has reached R1 here. R2 has also been reached. Both R1 and R2 have experienced some rejections. So this is how pivot points are used for intraday trading purposes. However, due to this being a trend day, we were able to capture around 450 points. On a normal day, this is not the case. For example, let's take a look at the previous day. The price has been trading below the pivot point, and after the first candle closes and a takedown happens, that's where we can look to execute. Let's keep our target till S1. Okay, S1 target has been achieved. This is where the candle closes, and this is our recent swing. Let's keep the stop loss over this swing. If you want, we can keep the T2 till here as well. Let's partially book this level. Meanwhile, if we check the price action, it tells us that the price can come down to this point. And yeah, it's there. Let's book our target. And if it goes down further, we'll have to book the third level as well. We can use the pivot indicator for intraday in such a way as well. It works really well for stocks, but the catch here is that you will need to frame certain conditions. Conditions as in, say, today's the last trading day, and due to a little gap down, the market opened, pulled back and started falling down. So, how did the market open in the first place? In case the market opens at a certain gap, we should always buy after R1 breaks. After R1 breaks and closes, it is only the time after which we should look for opportunities to buy. In case the market opens below the pivot level, after the pivot level closes, say for example if we look at Ramco Cement, the market opens beneath the pivot level. Pivot level has been closed at this point. This is the high of the candle that closed the pivot level. After closing, you can execute here by keeping your stop loss, keep T1 at R1, keep T2 at R2, and this is how we frame a system. So I hope that at this point you have a good understanding of pivot points. They are quite powerful tools. We even have weekly plots which can be used for swing trading. This here is Ramco Cement. The pivot point is located at R2 from where it reverses. If you look at this with a smaller time frame, you can find better opportunities within the chart. It's quite an easy yet effective system, but backtracing is extremely important. If you're using this for stocks, make sure to perform sectoral analysis. If you have any doubts regarding the session, make sure to drop them in the comments. Once again, don't forget to like, share and subscribe to our YouTube channel if you liked the video. Thank you and happy trading.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.